So let's discuss the double entry principle or the double entry system. Basic terms and concepts in this chapter, uh, the transactions and event. So we need to understand the transactions and events. So all the transactions and events should be recorded under the double entry system. So when you are recording in the double entry system, we use the ledger and we use the ledger accounts. Right? There are two types of ledgers: the general ledger and the sub ledger. Right? General ledger is a place where we have all the ledger accounts. There are 5 types of ledger accounts: assets, expenses, income, liabilities, and equity. So we record the transactions using the double entry system in these 5 types of ledger accounts. Right? So if you take assets and expenses, increase will be recorded as a debit entry and decrease will be recorded as a credit entry. So if this is the ledger account, left side is called debit, right, DR, and the credit side is called, the right side is called the credit side. Right? So asset and expenses, if it increases, we record them in the debit side, and income, liabilities, and equity, if it increases, we record them in the credit side. If it decreases, we have to record them in the debit side. Right? In using the ledger accounts, we have to prepare the financial statements. We have to prepare the financial statements. Right? So by taking the income and expense, by taking income and expenses, we prepare the income statement. By taking income and expenses, we have to calculate the profit. So the profit calculation is done through income statement. So the main objective of income statement is to calculate the profit, or else to show the financial performance of a business, to show the financial performance of the business. Right? That is income statement. And by taking the assets, liabilities, and equity, we prepare the statement of financial position. So it shows the financial position, the stability, or the ability to pay the liabilities, how much assets they have, what are the liabilities they have, and how much belongs to the owners. So that is from the statement of financial position. Right? So this is the area, this is the framework in this chapter. Right? So what is meant by dual aspect of transactions? Dual aspect means for any transaction, there is a dual impact, right? So that will affect 2 or more ledger accounts. A transaction will affect 2 or more ledger accounts. Dual aspect concept indicates that each transaction made by a business need to be recorded in 2 separate accounts. For example, if the owner invests money to the business, the cash will increase, so it will affect the cash account, and the capital will increase, it will affect the capital account. So any transaction will affect 2 ledger accounts. These accounts form a basis of double entry accounting and other financial accounting which is used to generate reliable financial statements. So using the double entry system only, we prepare the financial statements. Right. So what is this double entry? Every entry to an account requires a corresponding opposite entry. So that is the simple explanation. When we are recording a transaction, every entry needs an opposite entry. Right? All the transactions and events have double way of impact on accounting entities, assets, liabilities, and equity. Okay, so we record debit and credit. What are the advantages? Now we have several advantages in using double entry system. So when you record the transactions using the double entry system, there will be a complete record, right? So transaction will not miss. You will have a complete set of recordings, complete set of accounts. It facilitates the control of operations. There is a control. When you record a debit and a credit, there is a control, there is a link. So if one entry is missing, you can easily identify using a trial balance because all the debit should be equal to all the credit. Provides arithmetical accuracy. So when you have debited 50,000, you have to credit 50,000. So arithmetically, you will have a check, and it helps to prepare the financial statement. So these are some of the advantages of using double entry system. Right. So next, the ledger. The central place of keeping all the ledger account is called the ledger. Ledger is a place where we have all the ledger accounts, all the T accounts, right? Ledger accounts, right? Although now small businesses, they maintain only one ledger, which is called the general ledger. In the general ledger, we have all the T accounts. But when the businesses are expanding, right? When the businesses are expanding and when they have thousands of debtors and thousands of creditors, customers and suppliers, then they maintain separate ledgers for customers and suppliers and sometimes for their inventory as well. So we call them sub-ledger. Right? There are two types of ledgers, general ledger and sub-ledger. So what is the general ledger? A complete record of financial transactions and events. So all the transactions and events are recorded in this general ledger. Right? So this is the principal book of accounts and contains all the accounts of the business. And it holds account information that is needed to prepare financial statements, mainly the assets, liabilities, capital, income, and expenses. So we have these. Right. So these are basic double entries, or the double entries for some of the basic transactions. Right. Now what I'm going to do is, I did some of the basic stuff. Now I'm going to do a small game, a quiz. Okay, so I want you all to join this game, right? Right. So I want you all to join this website. Join. You can type www.kahoot.it. KAHOOT.it. Then this is the game pin. You type this game pin and enter to the game with your nickname, or you can type your name and enter. We are going to do a small activity. Okay. I'm waiting for the players. Take your phone. Yeah. So we have one. Yes, yes, it's now. Now. In your phone, you can type this, so you get to reach this site, right? So enter the game pin, and you will be there in the game. Make it fast. So we have 19 participants. I want everyone to join this game. What you have to do is type www.kahoot.it. Then this screen will come. Screen. So the game pin, you have to use the game pin to log in. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9. So I'm going to start now. I'm also so it will show like this. You are right. So shall we start? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Okay, I'm going to start now. Right? It's an MCQ questionnaire, right? So whoever, let's see who is getting the highest. Right? Let's start. 1, 2, 3. Question number 1. Among the items in the financial statement, what affect on profitability? Select what is the answer. Here is the time. You have to answer. Only 5 answered. You have to click the you have to click that 4 buttons. It will come to your mobile phone. Right? It's okay. So let's see. Right. So you are Havini, you are the top now, 677 marks. Okay. Whoever is getting they will come to the top. Right. You should click, yeah, you have to click the phone. In the phone, you will get a, now in the site, you have that four options. So you have to click that option. Right? Not in my shared screen, in your site, in your site. Okay. You have to click on the site which you logged in. Here, this one. Here, once you enter the game pin, in this site, you will have that. Okay. Right. So shall we do the next one? Let's do the next one also. Now, you won't see now, you will see it when I click the next question. Now let's try the next one. Next. 20 seconds. You will have this in the screen. So click on the answer. Yeah, from the four signs, you have to select the sign. From the four signs, you have to select the sign. So red color is, if the answer is red, you have to select red. Right? Right. Let's see. Okay. Good. And now only you got it. Okay. So let's do the next one. Right. Next. So we have, I can't start it from the beginning. Let's do it in the next class also. Okay. Right. Let's see next. Wow. Good. So Dano, you are close by. Next, we have 10 questions. 12, 11. Mm-mm. Uh-uh. There is a. Uh-oh. Actually, this question is answer is wrong. Sorry. Purchase of goods on credit. So I'm sorry about it. Uh, Wrong answer. Yeah, yeah, yeah. Sorry about it. That won't. Oh, Let's continue. It's okay. Let's continue. I will find out a solution for that. Yeah, it was a mistake. Real account under the traditional classification of accounts. What is the real account? I did real accounts and nominal account. Machinery. Real account means the real estate I told, the PPE, capital plant and equipment. So machinery account is correct. Next, nominal account. Nominal account. Nominal account means income and expense accounts. So if you can revise our note, here three types of accounts: real account, personal account, nominal accounts. The nominal account means income and expenses. Okay, so sales account is the nominal account, not the bank loan. Bank loan is a liability account. So we don't take liability. Right. Next. So if you give one wrong answer, marks will be reducing. Question number 7. Correct effect to of settling a short-term loan obtained from the bank. 6 answers. Decrease in asset and decrease in liability. Short-term loan. If you settle the short-term loan, the cash will reduce and the liability will reduce. Cash will reduce, liability will reduce. So it's okay. So we have 3 more questions. Who is on top? Right. Let's see. Select from the following the correct impact on accounting elements due to cash received from trade debtors. Receiving cash from debtors. When you receive cash from debtors, what's the impact? There is no change in assets. There's no change in assets. When you receive cash from the debtors, cash increase, debtors decrease. Cash increase, debtors decrease. So no impact. Right. So 3 correct answers. And then next. Correct double entry to record interest earned on a bank balance. Interest earned on a bank balance. The correct answer is number 4. 3 is wrong. because interest income is a income increase is credit. Therefore, interest income should be credited. And the bank account we receive, it's an income, so we receive interest. So bank account should be debit. Bank account debit, interest income account credit. So let's see the right. Right. Then we have one more last question. Last question. Which transaction affects both assets and liabilities? Right. Settlement of a loan outstanding payable of 10,000 of NIMA. So loan outstanding payable you are paying means cash will decrease and the liability will decrease. Right. So who has won the piece? Right. 6 out of 10. Yeah. Good job, Tarani. You got the highest mark. Even though the one question was wrong, the answer was wrong, you gave it the correct answer. So good job. Right. So just wanted to have some activity. Right. Is it interesting? Good. Can we continue? Right. So we are here. You don't like it? Okay. So let's move to the next question. In the queue, let's do question number 2 from the teacher's guide, where we have the double entry. From the double entry, let's try to identify the transaction. Let's try to identify the transactions. Okay, so the second transaction, the second question in the tube, identifying the transactions. Cash increase, capital increase. Cash account debit, capital account credit. The transaction is investment of capital. Investment of capital 300,000. Investment of capital 300,000. So that's the double entry. Yes. There is a doubt. So can you explain the double entry for provision for doubtful debt? Provision for doubtful debt. Double entry is doubtful debt. Now it has two parts. Under provision, over provision. Right. So we will do this adjust this under accounting adjustments, right, when preparing the financial statements. Right. So the moment I will give you all the double entry, the debit and credit. And the provision is income statement debit because it is an expense. And provision account, provision for doubtful debt account. So remember this. Later I will explain the over provision. Right? Over provision is the reversal. Provision account will be debit. Income statement will be credit. Right? So provision for doubtful debt double entry, income statement debit, provision for doubtful debt account credit. This is a asset reduction account. There is another question. I didn't understand that. Why the balance on the credit side? Which account? Maybe capital account, income account, and the liability account will have a credit balance. Asset and expenses account will have a debit balance. Right. So the second transaction, motor vehicle debit, capital credit. What is the transaction? Motor vehicle debit, capital account credit. What is the transaction? It's investment of motor vehicle. Worth 150,000 by the owner. Investment of motor vehicle worth 150,000 by the owner. Cash debit, bank loan account credit. So what is that? We are receiving, we are obtaining a bank loan. Obtain a bank loan of 20,000. So that's the entry. Obtained a bank loan of 20,000. Purchases account debit, cash account credit, creditors control account credit. So here, purchases account debit means we purchase goods worth of 50,000. So that is why 50,000 was debited to purchases account and cash was given only 30,000. Another 20,000 is payable to the creditors. 50,000 worth of stock purchased and 20,000 was paid. So only 30,000 was paid and balance is payable. Balance is payable. Right? 50,000 worth of stock purchased, 30,000 paid, balance is payable. Electricity account debit, cash account credit. That means we have paid electricity. Electricity paid 8,000. Electricity paid 8,000. Debtors control account debit, Sales account credit, that means it's a credit sales. Credit sales of 20,000. Cash credit means cash has been given to the creditors. Cash paid to creditors. 20,000. We paid cash 20,000 to the creditors. Next transaction, transaction number 8. We have got 8,000 from the debtors, and there is a discount allowed 2,000. Total debtor balance is 10,000. Received 8,000 from debtors and discount given is 2,000. Received 8,000 from the debtors and discount given is 2,000. Purchases credit. Drawings debit. Drawings debit means owner has taken from the business. So if he takes cash, cash will be credit. If he takes stock, purchases will be credit. Owner has withdrawn 6,000 worth of stock for his personal use. His personal use. Electricity expense account debit. Electricity payable account credit. Electricity expense of 1,500 is payable. So identifying the transactions. Identifying the transactions. Right. So we did double entries and transactions, identifying the transactions. Any doubts? So can you all identify the incorrect statement here? There are some questions. We will see. So in the question, when percentage is given for discount allowed or discount received, we have to deduct or added, and when amount given means it's already calculated. Amount given means already discount has been deducted. If they have given the amount, if they tell data 10,000 was data has data balance of 10,000 and discount percentage separately if they have given, then you have to calculate the discount from the total amount of the data. Right? Identify the incorrect statement as per the double entry principle. Asset and expenses increase debit. Liabilities equity. So first one is correct. Increases debit. Yes. Liabilities equity income increases credit. So that's correct. Fourth one, asset, equity, and income. Third one, assets and expenses. Decrease, assets and expenses. Decrease should be credit. Decrease not debit. Decrease should be credit. So third one is wrong. Fourth one, assets, equity, and income. Decrease debit. No, asset wrong debit. Assets and expenses. Decrease credit. So third, C and D is wrong. C and D is wrong. Right. So question number 4. Identify the correct statements as per the double entry principle. Correct statements. You have to tell me the correct statement. A, B, C, D, E. What is the correct statement? Purchase good for cash. Purchase is account debit, cash account credit. First one is correct. Purchase account debit, cash account credit. Purchase goods on credit. Sale of goods for cash. Sale on credit. Received in account credit. This one is correct. How about B? Purchase goods on credit. If you purchase on credit, that's the double entry. We don't record in the stock account, we have to record in the purchases account. Purchases account only debit, not the stock account. So second one is wrong. Third one, sale of goods for cash. Then the double entry should be cash account debit, sales account credit. So third C is also wrong. Sale on credit. Double entry, debtors account debit, sales account credit. Debtors account debit, sales account credit. Received a telephone bill. If you receive the bill, telephone expense account debit, cash is not credit, telephone bill payable account is credit. It's received, so it's payable, still you have not paid. So correct answer, correct statement is number 1. Only A. Only A is correct. That is the quantity. That is Any doubts? No. Question number 5. Mark whether the following statements are correct or incorrect. A. Father of modern accounting is Luca Pacioli. The father of modern accounting is, yes, so that is correct. Recording of the impact of transactions and events is done following double entry principle. The recording of the impact of transactions and event is done according to the double entry principle. Yes, it is also correct. Because when you are recording, you use the double entry system. C. Double entry principles to record equity is different to the principle for recording liabilities. Correct or wrong? Equity and liabilities. Are you using separate principle or same principle? That's incorrect. Use same principle for equity, income, liabilities. Same principle. Drawings of good decreases equity. When owner takes goods from the business, it will decrease the equity. Equity will reduce because of drawings. The net profit earned during an accounting period does not result in change to equity. Net profit earned during an accounting period does not result in change to equity. Correct or wrong? It's either. Wrong. If you earn profit, the equity will increase. So we'll do this one, we'll keep it. Okay. So I have done the basics of the double entries. What I want you all to do is the MCQs. Did you all do all these MCQs? Right? So you all can complete the rest in the tube and do the MCQs. I will discuss the MCQs in the next session. And I will share the answers as well. Any other doubts?